we gather here, it's essential to recognize the significance of these discussions in navigating the challenges and opportunities that lie ahead. In a rapidly evolving global economy, staying informed and engaged is key to making informed decisions and deriving sustainable growth. Throughout this series, we will explore a diverse range of topics from policy reforms to technological advancements, from market trends to regulatory frameworks, all of which play pivotal roles in shaping the trajectory of our economy and banking sector. Today, we are particularly excited to set the context of our upcoming discussions by addressing some of the most pressing issues confronting the Indian economy and the banking sector, from the impact of global events to domestic policies, from financial inclusions to digital transformation. We will examine the forces driving change and the strategies needed to navigate them successfully. We extend our heartfelt gratitude to our esteemed speaker, Dr. Manoranjan Sharma, Chief Economist, Informix Valuation and Rating. Yeah, we extend our heartfelt gratitude to our esteemed speaker, Dr. Manoranjan Sharma,
Yes,
Chief
sir. Audible, sir.
Economist. Yeah, now it's audible, sir.
Yes, sir. Yes, sir. Perfect.
Yes, sir. Thank you, sir. Yes. We extend our heartfelt gratitude to our esteemed speaker, Dr. Manoranjan Sharma, Chief Economist, Informix Valuation and Rating Private Limited, Delhi. He is a former General Manager, Chief Economist, and Chief Learning Officer of Canara Bank. Sir has completed MA Economics in Gold Medalist and postgraduate diploma in Business Management, and he has awarded PhD in Banking MSMEs by the University of Lucknow in 2010. Uh, Sir has secured the distinctions, awards, and honors Lifetime Management Excellence Award 2023-24 by Indian Institute of Management and Research, Gwalior. The Guru Arjan Dev Institute of Development Studies Research Award 2021 for his outstanding research in the area of economic development, particularly sustainable development by the Guru Arjan Dev Institute of Development Studies, Amritsar, and IAF CSR Award 2021 by the Indian Institute of Finance, Delhi, whose expertise and insights will enrich our discussions, and to all of you, our participants, for your active engagement and contributions. I would like take this opportunity to welcome through Shankar Vanavarayar, Joint Correspondent, Kumaraguru College of Liberal Arts and Science, whose able leadership and guidance have been instrumental to the department activities to this lecture. I also welcome Dr. Vijla Edwin Kennedy, Principal, Kumaraguru College of Liberal Arts and Science, who has always provided immense encouragement towards all our initiatives, illuminating and guiding us on the various initiatives and giving us ample support to think differently. And I also welcome Dr. Shaktivel sir, uh, Academic Dean and Accreditations of Kumaraguru College of Liberal Arts and Science. And I extend my warmest welcome to all the deans, heads of the departments, faculty members, and students of Kumaraguru College of Liberal Arts and Science, and participants from across the world attending today's lecture. Together, let us embark on this intellectual journey, passionate by curiosity, collaboration, and a shared commitment to advancing knowledge and driving progress in the Indian economy and the banking sector. Once again, welcome to the NMCPP monthly lecture series. Let's make today's session insightful, interactive, and inspiring. Thank you, Monita. And now I hand over the session to Professor Dr. Manoranjan Sharma, sir. Thank you.
Thank you, sir. Vanakkam. Am I audible?
Yes, sir, you are audible.
Yeah. Sir, you have been very kind and generous. You have given 40 minutes, so we're starting at 10:22. So I'll close at 11:02, and then we have 20 minutes for question answers. Will that be okay?
Yes, sir, fine.
Fine. So at the outset, I'm thankful to this institution for having me with you on this issue of considerable contextual significance. Uh, as the person anchoring the show pointed out, I have been a banker by profession, but an academician by choice. And it's a pleasure and privilege for me to be part of this leading institution in Tamil Nadu. Now, when we look at the issues of economy, banking, and finance, these issues are perhaps as old as human civilization. But of late, there has been a greater significance of the issues of the macroeconomy, the banking in the financial sector, with the obliteration of geographical boundaries and the world rapidly becoming a global village. What we in India have always believed for hundreds of years, possibly thousands of years, what we say in Sanskrit as Vasudhaiv Kutumbakam, the world is a community. But of late, there has been a liberalization of markets, privatization of ownership, and globalization of the economy. I'm reminded of the comments of a Nobel Prize winner. I think he was Cezro Milos, a Polish new person of literature who has made significant contribution to the world of literature. And he has stressed that we are all prisoners of our experience. So whatever observations I make today are based on my experience in the banking and financial sector for 3.5 to 4 decades. Now, when we look at the macroeconomy or the financial sector, the banking sector, it has to be realized that this is not a silo. It is a microcosm, a miniature model of the broader macroeconomy. The case for development and structural transformation of the banking sector has to be placed in a proper historical and comparative perspective. When you look at the events of the last few years, what you find is that in the last 10 years or so, the Indian economy has been hit by what has sometimes been called, I have been calling it at least in any case, a triple whammy. The triple whammy of demonetization, the rolling out of goods and services tax, and the COVID 19 pandemic. All these events had severe disruptive effects on the Indian economy. The COVID 19 pandemic was a medical cum economic emergency, and the nearest comparisons which come to mind are the Spanish flu of 1919. So, in certain ways, it was an event of a great magnitude in the last 100 years. The COVID 19 pandemic has sometimes been compared to the global financial crisis of October 2008 and even the Great Depression of 1929. But the data and information, the kind of research which is flowed from the IMF, the World Bank, OECD, Organization for Economic Cooperation and Development, the NITI Aayog, the Reserve Bank of India, and other important individuals and institutions clearly substantiate the thesis that in terms of the hit to income, output, and employment, this was a crisis of far more severe dimensions, far more debilitating crisis than the global financial crisis of October 2008 and even the Great Depression of 1929. Now, before I go further, I'd like to highlight one issue that even before the pandemic, the Indian economy had hit a rough patch. Some of you may be aware that one of the most authoritative reports of the government of India And this has been so across governments, across time periods for the last 50, 60, 75 years is the economic survey published by the Ministry of Finance, Government of India. And this report is tabled on the floor of the Parliament by the Honorable Union Finance Minister on the day preceding the presentation of the Union budget. I think in 2011 or 12 economic survey, the then CA, Chief Economic Advisor, Dr. Arvind Subramaniam, came up with a term called twin balance sheet crisis. By a twin balance sheet crisis, he meant that now, of course, banks' financial position, that time banks were struggling with high and mounting levels of NPAs, non-performing assets, bad loans, and the companies to which they had financed on such a large scale were also highly leveraged. Uh, I think in 2014 or 15, Dr. Arvind Subramanian left the CA job of Chief Economic Advisor to the Government of India. He went to the US for some personal work. In 2019 or so, Professor Arvind Subramanian made an important presentation at the University of Harvard, which most of you in the US, which most of you would agree is perhaps regarded as one of the foremost centers of higher education, the Mecca and Medina of higher education globally. And in that presentation in 2019, Professor Arvind Subramanian expanded his concept of what he called the twin balance sheet problem to a four balance sheet problem. Uh, what he did was that apart from the position of the banks and infrastructure, he also added the disarray in the real estate sector and the weak position of NBFCs. Some of you may recall in 2017-18, we had a major crisis triggered by the collapse of ILNFC. Now, post-pandemic, of course, the Indian economy went into some kind of a recessionary phase. First quarter, April, June 2020, we had a hit of something like 24.7, close to 25%. The GDP of India went into contractionary mode, followed by another contraction, another shrinkage of well over 7% in the July-September quarter. So this was a very serious event. And obviously, because of such huge hits to the GDP in the first two quarters, we ended the year 2021 with a negative growth also, which was the first time it happened in the Indian economy um, since possibly 1979. Now, let me here basically, because they are students of economics, finance, management, one basic issue that sometimes there's a tendency to use terms such as deceleration, slowdown, shrinkage, recession interchangeably. But this is not the right way of going about it. A deceleration and slowdown could perhaps be used interchangeably. But when you speak of a recession, it is a far more serious event in the sense that it has been defined as something when you have a contraction, when you have shrinkage, when the GDP moves into the negative territory consecutively for two quarters, then we have a situation of what is known as a recessionary phase. Now, given this kind of a situation at the global level, also the Indian economy, uh, most countries announced significant stimulus packages, which went even up to 20% of the GDP, which is a huge and a humongous figure. In India, also, the Union Finance Minister announced significant stimulus measures, which were seen to be of the order of something like 10% of the GDP. Now, if you do some kind of a granular examination, what you find is that some of the hardest hit sectors, in case of the Indian economy, also in case of the global economy, were the sectors which had intense human contact, sectors such as MSMEs, micro, small and medium enterprises, civil aviation, tourism, logistic and hospitality sectors, services and constructions. As a general rule, IT intensive sectors and of course the pharma sector, the drugs and pharma sector did well. So basically, in case of the Indian economy, there are four engines of growth, and all these four engines took a hit. The four engines of growth in case of the Indian economy are domestic consumption, government expenditure, private investment, and exports. Now, with this kind of a brief overview, let me come straight to the present position. And now, when the global economy is growing something of the order of 3 point, if you look at the IMF, World Bank estimates, they put out quarterly figures in the public domain, and these are also subject to revisions on an ongoing basis. But if you look at the latest figures which have been placed in the public domain by the IMF, the GDP this year is likely to, at the global level, likely to grow by something of the order of 3.1%, 3% or so. So when you place India's GDP growth, robust growth of something like 7.5, 7.6, 7%, that means that we are outperforming the global economy by a fair clip. And what is particularly welcome is that these kind of sustained growth is here to stay, and unless, as we say in economics, ceteris paribus, other things remaining the same, unless there is some untoward development, this kind of a growth of well over 7%, sometimes in the region of, in a band of 6 to 8%, is likely to stay for the next 2 decades or so. And this is largely because of the demographic dividend. Traditionally, in economics, population was seen as some kind of a drag on economic development. This goes back to the work of Thomas Malthus way back in 1798 when he wrote a seminal paper, in real sense is a path-breaking paper in which he referred to the concept of arithmetical progression and geometric progression and showed that population works as a drag on the development process. Now, this kind of thinking, this kind of a paradigm held sway for something like 200 years, something like more than 200 years, from 1798 to October 2003 to be precise. In October 2003, the financial in the financial sector, we have a very important company based in the US, but they have offices all over the world, Goldman Sachs. And a two-person team of Goldman Sachs. One was an American professor called Professor Dominic Wilson. The other was an Indian lady called Rupa Purushottam. And they demonstrated quite tellingly for the first time that population need not be seen as some kind of a drag on the process and the pattern of economic development, but it needs to be leveraged as some kind of a strength. Because if you look at the India's present demographic position, what you find is that we have 50% of the population below the age of 35 and about 70% of the population in the age group, the working age group. So this gives India a distinct advantage in comparison to other countries which are aging significantly. Uh, Now going forward, if you look at the Indian economy, there are issues of inflation about 15 years back, about 12 years back, 12, 15. The RBI used to look at, there are six benchmarks of measurement of inflation in the country, but the two primary indicators have been the WPI, Wholesale Price Index, and the CPI, Consumer Price Index, also sometimes called the retail inflation in India. Till about 12 years back, the RBI used to factor in this concept of a wholesale price index, WPI, for formulation of their monetary policy. But given the wide ranging criticism that this kind of a data was not fully representative. They shifted to this concept of uh, factoring in their policy formulations on the basis of CPI. About 7, 8 years back, the RBI also had a monetary policy committee, popularly called MPC, in which there are three members of the Reserve Bank of India, including the governor and the governor of the Reserve Bank of India and a deputy governor, out of the four DGs that we have there, and three eminent experts of economics outside the RBI fold. So they have been mandated to manage inflation uh, at about 4% with plus minus 2%. So effectively, when you see that the band is something like 2 to 6%, uh, till a few months back, inflation last year, particularly inflation had shot the upper threshold level of 6% consistently for several months. In fact, last year, at one particular point of time, there was a situation when the CPI, the retail inflation, crossed the threshold level of 6% for 9 months, 3 quarters at a stretch, and then several measures were taken. Now, thankfully, if we look at the present position, we have softening of the inflation. Inflation is coming down from a level of 5.7% in December 2023 to 5.1% both during January and February 2024. However, food inflation continues to cause some kind of a concern. Now, when you look at the global scenario, you find that there is stress, there is strife, there are heightened global political tensions across the world. The Russia-Ukraine war has been going on for about 2 years or so. We had another flashpoint in first in Palestine and Israel, now also in Iran. There are also issues of volatility in crude oil. But despite all this, what we say in finance and economics, the bottom line, net, the Indian economy seems to be on a steady growth path of something like 6.5 to 7.5% going forward. Now that inflation is not so much a concern, and there is a need to provide some greater traction to the process of growth. Possibly this financial year, we could have some rate cuts by the central bank of the country, the Reserve Bank of India. And our take, which we have placed in public domain, is that in this financial year, the Reserve Bank of India could cut policy rates by 60 to 75 basis points. Now, if you look at the tax collections have been some kind of a role, both the indirect and the direct tax collection. Direct tax collections surpassed the level which is anticipated in the budget. They surpassed even the across the threshold level of even the revised estimates, and maybe I think about last financial year we had direct taxes of the level of collection of the level of something like 20 lakh crore. In case of indirect taxes also, we have moved from one peak to another. And despite some volatility, if we look at the figures in the last few months of GST collections, they seem to have stabilized at a level of something like 1 lakh 60,000, 1 lakh 70,000 crores. So when you extrapolate these figures on an annual basis, you find that the GST tax collections are at a level of well over 20 lakh crore this year. There have been higher corporate bond issuance, which also suggests business recovery. Capital market, I'm sure in Tamil Nadu, some Chennai, Coimbatore, some of you may be investing in the stock market. The stock market has jumped from one peak to another. Obviously, there could be some intraday variations, some kind of a volatility, but then uh, on a sustained basis, a few days back, I think it was on 9th April, that the BSE Sensex crossed the level of 75, psychological barrier of 75,000 points. Similarly, there has been a similar stratospheric massive rise in the NSE. FPI's inflows, debt, equity are rising again. There is a significant thrust on the infrastructure and the core sector output. Forex reserves, India is again doing very well. If you look at the recent level of forex reserves in the country, we are at a level of something like 640, $645 billion, which places India in a very strong position. So this is one part of the story, but there's another part of the story. So let me highlight some other facets of the Indian economy. There is everything is not hunky dory. Yeah, there we need to focus also on certain aspects in which we have not done well. If we look at the global position, traditionally there are three sectors of an economy anywhere. If you look at the IMF, World Bank data set, there are roughly something like about 200 countries in the world today. So traditionally, countries were primarily dependent on agriculture and allied activities. From there, the focus shifted to manufacturing, industry, and subsequently we moved to the tertiary sector or the services sector. But in case of India, there has been a significant deviation from this observed pattern of growth in the sense that we seem to have leapfrogged from agriculture sector to the services sector, and manufacturing did not grow on the desired lines. Now obviously a lot of measures are in place, make in India, development of MSMEs, uh, some other measures. So we are focusing on a lot of reforms, labor, land, other measures, so that manufacturing sector, the industry sector in India could absorb a larger proportion of the working age population. Because when you look at the agriculture sector, you find some kind of a degree of significant asymmetry. In simpler terms, asymmetry would mean an unevenness in the sense that while agriculture and other activities contributed something like 50% of GDP way back in 1950, their contribution to GDP has now shrunk to something like 18% or so. But then, still about 50% of the people continue to be engaged in various activities relating to agriculture and allied activities. So there has to be a significant focus on absorbing more persons in the more productive, efficient, um, industrial sector. And this issue needs to be given a sharper focus. I'm reminded of powerful words of a French thinker, Victor Hugo, when he stressed maybe 200 years ago that the invasion of armies can be resisted, but not an idea whose time has come. So, obviously, in case of India and almost all of us across the development spectrum, are completely agreed today that there has to be a sharper focus on the growth of the manufacturing and the industry sector. Uh, uh, Going forward, when you look at the other issues of concern, there are issues of concern in the sense that we have to manage inflation at something like 4%. Some, as I said earlier, last year we had some periods where some quarters when it shot over the 6% mark. Current account deficit this year, I think we are well on track. But then some phases, the current account deficit goes beyond manageable proportions. For an economy of the size and the growth potential of the kind of growth that the Indian economy has, a CAD deficit, current account deficit of something like 2.5% of GDP. If we are able to contain it, that is good. The rupee, there has been some kind of a fall in the value of rupee. The rupee may be trading at something like 83 rupees to the US dollar. So all these issues remain to be addressed more effectively. At the more fundamental level, there are also issues of absolute and relative poverty, in degree of inequality, and skew in the distribution of income and wealth, and the need to promote employment across the country, particularly in case of educated unemployment. That has become an increasingly important issue all over the country, even more so in the southern part of the country. And all these aspects need to be effectively addressed to meet the what is known in India and abroad, even world looks at it this way, as a revolution of rising expectations. So, uh, when you look at the banking sector, there has been the Jam Trinity, Jandhan, Aadhaar, mobile, financial inclusion has been given some kind of a focus. IBC 2016, insolvency and marked a paradigm shift that it changed the entire ecosystem of recovery. While the actual functions and working of the IBC 2016 may have fallen short of expectations, there is no doubt that it has improved significantly, transformed recovery ethics, and enabled a recovery environment in the country. Now, if you look at the position of banks, then obviously you look at there are several ways in which the assessment of banks is made. One is the level of gross, net, and gross net and gross non-performing assets. These are, if you look at the RBI's latest financial stability report. So while the banking industry is not a monolithic category, it is not a homogeneous group in the sense that there are private sector banks, there are public sector banks, there are foreign banks, they are cooperative banks, they are regional rural banks. And even within these groups, there's significant differences. But when you speak of the larger banking industry in India, what has been technically called by the Reserve Bank in their publications as SCBs, Scheduled Commercial Banks. That means those banks which are listed in the second schedule of the RBI Act 1934. So when you look at the position of banking industry, there has been a significant improvement. The level of GNPAs, gross non-performing assets, used to be about 12 years back, 10 years back, something in the 10 years back, something in the region of double digit, 10, 11%. Now they have come down to a level of something like 3.5%, and net non-performing assets have done even better at about 1.5% or so. And the important indication, which is obviously a related, is the level of gross and net profits generated by various constituents of the banking sector, particularly the performance of public sector banks has come in for a great deal of debate and discussion. Banks in the last 5, 6 years have been in the news for all the wrong reasons. The cases of Nirav Modi, Mehul Choksi, Vijay Mallya, Deccan Chronicle, so many undesirable uh, entities, their performance has come to light and they have contributed to worsening of the asset quality of the banks. But then, thankfully, if we look at the year which has just gone by, maybe the public sector banks themselves had a net profit level of well over 1 lakh crore, which shows a significant improvement in the performance. And what is more welcome is that this kind of a performance is likely to stay here for a considerable time. This is something like here to stay. And if you look at the latest position, banks in India are traditionally issued of credit not picking up, but credit has picked up. Their issues of asset qualities are well under control. There are other banks are also spreading their wings. Financial inclusion, financial automation, technology has been a very important driver of the banking system, and all these aspects placed the Indian banking system in a position of greatest strength. Uh, I'm reminded of the Holy Bible because, as I said earlier, during the days of pandemic, there was an environment of all gloom and doom. But as the Holy Bible is stressed that this too shall pass, this things are likely to. Similarly, a very famous English poet said that P.B. Shelley, if winter comes, can spring be far behind? So obviously, the Indian economy and the banking sector has come through difficult times, but going forward, obviously there are issues of challenges. There are some difficult issues which we have to manage, which we have to surmount. But if you take a broad brush approach, if you place things uh, in relation to the global position or the kind of position that we have faced in the recent past. Now, both the Indian economy and the banking sector are in a position to take off with significant innovation, business process re-engineering, technological automation, the kind of revolution that you see in technology, in the payments space, in so many other through digitization has hardly any parallel anywhere in the world. And this, even the IMF has acknowledged and they have referred to this kind of a thing as a digitalization induced productivity gains, particularly in the banking and financial sector. So, all these provide significant tailwinds, uh, significant impetus to the growth and structural transformation of the Indian economy in general and the banking and the financial sector in particular. So, I think we are close to 11 o'clock. So, I might have spoken for about 40, 35, 40 minutes. So I suppose we can take a break here. I will stop here and so that we have enough time for any kind of question answers, any kind of queries which you may have. I will try to respond to all your queries. Thank you very much for having me with you all here. Nandri, Vanakkam. Thank you once again.
Uh, Thank you, sir. Really, this is wonderful presentation. Now I'm asking to the audience, is there any queries or any other questions you can ask directly to our Professor, sorry, Dr. Manoranjan, sir.
Doctor, excellent, insights you have given about the Indian economy and connecting with the banking sector and other aspects. Now there is a talk which it's going on for a decade. The world is looking at India and China as the next, the next economy, because almost if you see the Asia controls 50% of GDP of the world, and China is leading the forefront. It's almost just next, like the largest economy in the world. But India is actually, we are just trialing in somewhere in the $3 to $4 trillion per annum, the GDP. But all the top rating agencies are betting on India. So India is catching up on China, and uh, by 2030, we will actually almost at par with China. So how it is going to be possible? How India can achieve that kind of a big feat of getting into China's league? So what is your actually thought about?
Well, let me attempt to answer your question. Very interesting question in two parts, both good and bad. One is that why is the world betting on, why is the world bullish on India? One is that if you look at the latest, and let me start with the caveat, let me start. Indian figures are seldom challenged at the macro level, at the level of the IMF, World Bank, but Chinese figures have always been looked at with some kind of a suspicion, some kind of a skepticism, because we are not sure of the sanctity of the data which comes out of the Chinese economy. Now, why is there has been a shift of focus? One is there has been some kind of a discernible slowdown in case of China. where India seems to be on a steady growth path. In case of China, one of the two of the most important sectors which facilitated, which acted as some kind of a growth triggers for the Chinese economy, where the real estate sector and exports both have taken a massive hit. And if you look at the latest projections of the IMF, the World Bank, OECD, all of them are agreed that the Indian growth rate is likely to outstrip the Chinese growth rate by a fair clip. Another aspect is particularly post COVID, the Chinese adventures in Galwan. They have doing some kind of a muscle flexing in Taiwan also. So all these things they have placed the they have increased the significance of India at the global high table, and we are getting right kind of so lot of companies, some of the biggest mega corps, huge corporations are shifting their bases from China to India and to other also as a measure of reducing concentration risk. So all these place India in a very good position. So this is the positive part of the story. We are likely to outstrip the Chinese growth rate going ahead by a fair margin. And this, particularly in the light of the demographic dividend, the concept of BRICS, which has emerged, BRICS, Brazil, Russia, India, China, South Africa, these will be the most important players on the global scene. So this is one part of the story. But then, as you referred to, we must not lose sight of the overall picture, in the sense that at the present level, we have a lot of catching up to do. Of course, we are growing, doing much better than China. But as you said, if you look at the global economy, India is has a GDP level now, matter of some satisfaction that recently, about I think 7 8 months, we pushed Great Britain, which ruled us for about 200 years, to the sixth slot. We are the fifth largest economy in the world with a GDP of something like $3.8 trillion, $3.9 trillion. Going ahead in another possibly 2 years, we could be the third largest, next only to the US and China. But if you look at the composition, if you look at this kind of a total level of GDP in countries like China, US, the Chinese economy still is something like $17 trillion economy. If you look at the US, maybe 35 trillion economy. So we have a lot of catching up to do. And this is also reflected in the fact that despite the fact that we are the fifth largest economy globally, our per capita income, because of the high power, they have not grown to the desired level. For example, let me give you again the example of Great Britain. There was a great deal of debate, discussion on all TV channels, all so-called pink papers, Economic Times, Business Standard, Financial Express, Mint, Hindu, Business Line, and others, that matter of some satisfaction, gratification for all of us that we are the fifth largest economy. But any kind of cross-country comparison is riddled with difficulties, is riddled with methodological and other inefficiencies. But one of the standard measure of comparison across countries that has its own defects, but within those limitations is the per capita income. If we look at the per capita income of India, still it is something like 2450, roughly around 25,000 or sorry, 2,500 US dollars. Whereas in case of US, UK, sorry, in case of UK, which took a great hit because of concerns of rising inflation, stagnation, concepts of stagnation came to the fore, both in the US and UK last year to the at the global level. Still, UK has a per capita income of something like 44,000 US dollars. So, whereas we are languishing at 2,500 US dollars. So, there's a lot of catching up to do. So, going ahead, we are on the right path. We are growing very well. We are moving, as we say in Delhi, moving to the Amrit Kal, the golden period of our history. And then, but we have to continue on this process with redoubled efforts, with greater vigor, so that we are able to meet the challenges of today and the expectations of tomorrow. Thank you.
All right. Thanks, bros. Excellent, excellent answer actually, because thank you.
Thank you, Professor Sakivel, sir, for asking this wonderful question. And sir also has explained it very well. Sir, and one more questions is there from our participants. The question is there any link between finance, financial development, economic growth, and the environmental quality of a country?
Can you repeat the question once again, please?
Is there any link between financial development, economic growth, and the environmental quality of a country?
Yes, certainly there is a small, there is a strong link. If, recently, all over the world, these issues of financial development, economic development, when you say broadly, it subsumes financial development. So it's we will use, there is some kind of a technical difference, but for the sake of simplicity and to keep the answer brief, I'll just take it financial and economic as one part. But then of late, going back, I think to 1970s, where the Club of Rome approach. Then we're at the level of the United Nations sometime in late 70s, 1976, 19. Then we had the Brundtland Commission. Then subsequently, the issues of sustainable development have increasingly come to the fore. The issue of sustainable development has various parts. There are some integral parts such as environmental pollution, waste, waste management, clean development mechanisms, uh, such climate change, which has become a major issue these days all over the world, climate, and the issue of emissions. Uh, so here, if you look at the global level, what you find is that what is known as EMEs in the World Bank lingo, emerging market economies, or to keep it simpler, developing economies like India and China are on the same page. We have to, issues of climate change, issues of sustainable development are certainly very important for us. But there has to be some kind of a marriage, there has to be some kind of a reconciliation of the goals of development and environmental friendly mechanisms and strategies. We cannot only focus on environment friendly mechanisms. At the global level, if you go through the debate in the particular, India and China have also have very effectively raised the issue of what they call historical emissions. Let me, this is a very important issue, one of the most important issues, and since you have raised this question, let me try to respond. Uh, Whenever the process of economic development takes place, you set up factories, you set up business units, you inevitably generate some amount of emission, pollution. Factories going, in case of England, we had the steam revolution, then we had the industrial revolution. Similarly, England. In case of India, there was not much industrialization. Also, in case of China. So, here we say that the stand of India has been consistent at the global level, that you cannot put an arbitrary cutoff just like that, in the sense that you can claim that till 1950 everything was hunky dory, and now India and China have emerged as major polluters because of their focus on the issues of economic growth and structural transformation. It has been this consistent stand of India and China that we have to look at historical ambition for the last 200 years, at least going back to the days of industrial revolution, because these countries have been polluting the so-called Western countries, the so-called developing countries. So there has to be, if countries like India and China are to move on this climate change front very rapidly, if they have to contain the damages to sustain There has to be a significant incentive. These countries need to be incentivized by the issue of huge funds transfer from the so-called developed countries or multilateral institutions like the IMF, World Bank. Unfortunately, this has become a very thorny issue. We have not been able to move. There seems to be a broad range of agreement. But ultimately, the issues of finance, not much money has been coming either to India or to China in just in a lighter vein. All of us are influenced by the American, the Western ways of living. So one popular expression. Basically, it emanated from America, but now used all over the world is it's all about money, honey. So issues of money constitute the bottom line, and for India to move steadily forward in a manner which reconciles, harmonizes the issues of climate change, the issues of sustainable development, the issues of clean development mechanisms, waste material with the objective of growth and structural transformation. There has to be a significant transfer of financial resources from the developed world, from the multilateral institutions, which unfortunately does not seem to be coming anytime soon. Thank you.
Yes. Uh, yes, sir. Thank you, sir. I hope the Anisha Jain has clarity of that questions. Like, so the next one, like Malavika has asked one question, like, uh, on jobless growth of that India is facing, what can be done to overcome it?
Well, thank you. It's a very complex question. There are several parts. One is that we have traditionally believed in economic literature, in development studies, that as growth picks up, not only the size of the national cake will grow, but also it will be more evenly distributed across geographies, across different regions, across different sections of population. Uh, how to address this issue of jobless growth? This is a very complex issue, but then some employment intensive industries, for example, the micro, small, medium enterprises, those issues could be addressed more effectively. Then startup is again a very welcome measure which generates, most people are now also focused on becoming entrepreneurs. The government of India has also facilitated a scheme called Mudra loans, in which people are encouraged in their business ventures and to set up their own funds. Another welcome scheme of the government of India in the last, I think 2 years back, it was announced that to provide something like a leg up, to provide an incentive for the persons. Because when you look at the micro, small, medium enterprises, which is a significant creator of employment, traditionally they have been bogged down by, they have been faced basic issues of credit, marketing, infrastructure, and technology. So I've been working in this space of micro, small, medium for the last 3, 4 decades, and then unfortunately, um, these kind of issues have been there for quite some time. Now, the government of India, the Reserve Bank of India, the public sector banks, planners, and policy makers are focused on all these issues, and we are trying to make a difference. Another issue is that when you look at MSMEs, what you find is that most ventures fail within the first year. So, to generate sustainable employment, these issues should be able to stand their ground. So, in this connection, I think 1 or 2 years back, the government of India announced what they called a fund of funds with 10,000 crore, which gives equity support to the new ventures. So, this is a welcome measure. Or there has also, since uh, there's also been, apart from high unemployment, there's also been income inequality. So financial inclusion, the use of mechanisms such as business correspondence, BC, and business facilitators, uh, providing some kind of a safety nets to persons at the bottom of the pyramid also need to be addressed. So creating employment is a major issue, and then it's a complex issue. Since we are in a management institution, in a leading institution, of late, one unfortunate aspect of the unemployment situation, which has significantly come to the fore, is also the issue of educated unemployed. So here, there are one related aspect of what is called employability. People may pass from institutions of, but they are not employable. So, with the changes in course curriculum, with greater cooperation between the academia and the industry, uh, some kind of a more fine tuning contacts at the various level, internships, closer coordination between industry associations and the centers of education. All these are being focused. Several such measures have also been taken in the new education policy, which was formulated by the government of India. I think it came out in May 2020 or April 2020 after a gap of 37, 38 years. So some of these issues have also been highlighted. The issue of employability has become an increasingly important issue, particularly at the level of educated unemployment, and all these issues. They are being addressed, but it's difficult to put a time frame on how, by which timeline they'll be addressed. But let me assure you, from my understanding, to my mind, we are tackling these issues with the kind of seriousness, with the kind of urgency, because of its implications for growth, distribution, social justice, uh, and variety of other, taking all sections of population. So this is a complex issue, but several strategies are being used individually and collectively to improve the situation, both at the national level and across different geographical geographical regions, sectors, and different sections of the population. Thank you.
Thank you, sir. The one more question, sir. I think that is an how can the banking sector innovate to address the financial needs of an aging population while ensuring long-term sustainability?
As I said earlier, the banking sector has taken technology innovation. There has been payments space. There has been a revolution, and then by greater use of all these tech channels, for sitting at home, you can make your transactions. So all these will help all sections of the population. Now, most people, they are not required to visit the bank branches. If we look at the position about 30 years back, maybe all of us had to visit to withdraw money, to deposit some amount. Now with RTGS, NEFT, tech-enabled challenge um, channels and mechanisms, all this is gradually becoming a thing of the past, something like history. So obviously, these are very welcome measures, but then these measures need to be given greater impetus so that we have undivided focus on the technological upgradation, on the kind of digitalization, which is, as I said earlier, even the IMF has acknowledged that this is a kind of a process which is currently on in India, which is hardly any parallels. But just to sound a note of caution is that focus on technology comes with its own set of challenges, such as phishing, hacking, misappropriation. And when we move full steam ahead on this issue, we need to be cautious that these things are not misused, particularly the poorer sections, particularly the older sections of the person, older group of persons who have saved their hard-earned money. So that should not be, they should not become easy prey to fraudsters, to manipulators. So all these issues of cyber security, issues of technological safety also need to be adequately stressed. Thank you.
Yes, sir. Thank you, sir. One more, the last questions like how can India strengthen data privacy laws and cyber security measures to safeguard sensitive financial information and prevent cyber threats through AI technology?
AI and digitalization, they have become the buzzwords going forward. This process is likely to stay and this gain momentum in the days and years ahead. But then you raised very wide issues. Here there are some conflicting issues of data privacy also. So our data should not be accessed by persons who do not require it. So the government of India is moving ahead with this issue of data privacy. This has become an important issue. A lot of our data, all of us use Google. Some people may be using this GPT chat boxes, uh, all these Zoom platforms, Teams, so many other platforms. So in this process, a lot of our data, knowingly or unknowingly, wittingly or unwittingly, is uh, available in the public domain for misuse by fraudsters, by people who do not have good intentions. So all these issues need to be managed in an effective manner. The digitalization is the way to go. There's no doubt about it. But then cyber security, this has become an increasing concern. Hacking, phishing, user impersonation, so many other things. So all these issues we have to go ahead in a manner that these issues, they can never be entirely eliminated, the issues of frauds, but they can be kept within manageable proportions. There can also be a system of bringing these fraudsters to book quickly and handing out some kind of a deterrent punishment. So obviously this is something like a work in process, and all of us are agreed that going ahead, this is going to be a difficult issue, but with synchronized attempts made by the banking system, financial system, um, technology experts, software people, planners, and policymakers, I'm sure uh, going forward we are able to work out this kind of a measure, something the middle path between data privacy and also without preventing misuse of data, greater use of digitalization, greater use of technological automation. Thank you.
Thank you, sir. Really, this is a wonderful discussion. Based on your expertise, we got more information regarding that the leading issues on Indian economy and banking sector. So as we now going to the conclude of this lecture, so as we draw the curtains on yet another enlightening session of the NM CPP monthly lecture series on leading issues in the Indian economy and the banking sector. It is my privilege to extend heartfelt gratitude to all who have contributed to the success of this event. First and foremost, I would like to express my sincere appreciation to our esteemed speaker, Dr. Manoranjan Sharma, whose expertise and insights have illuminated our understanding of the pressing issues shaping the Indian economy and banking sector. Your thought provoking presentations and invaluable contributions have enriched our discussions and inspired us to delve deeper into these complex topics. I would also like to extend our gratitude to our joint correspondent, Thiru Sankar Vanabrayar, whose able leadership and guidance have been instrumental to this lecture series. I also thank our principal, Dr. Vijaya Edwin Kennedy, for given entire support and guidance. And my special thanks to Professor Saktivel, Academic Dean and Accreditation, Kumaraguru College of Liberal Arts and Science, and members of the audience from various institutions. Your active participation, engaging questions, and insightful observations have been instrumental in making today's sessions truly enriching and meaningful. Your presence here today reflects your commitment to learning and your dedication to driving positive change in our economy and financial systems. I extend my warmest thanks to all the deans, heads of the departments, faculty members, and students of Kumaraguru College of Liberal Arts and Science and participants from across the world attending today's lecture. A special word of thanks goes to the communication team, Kartikeyan Vishkam, student and his department, an organizing committee, volunteers whose meticulous planning and tireless efforts behind these scenes have ensured the smooth execution of this lecture series. Your dedication and hard work have been instrumental in making this event a resounding success. Last but not least, I would like to express a profound appreciation of NMCPP for providing a platform for intellectual exchange and construct dialogue on critical issues facing on our nation. Your commitment to promoting knowledge sharing and fostering collaboration is commendable and greatly appreciated. As we conclude today's sessions, let us carry forward these insights gained and connections made to continue our journey toward a more prosperous and inclusive economy. We look forward to welcoming you all again to upcoming editions of the NMCPP monthly lecture series on 30th April 2024. The topic is insurance market for treatment of rare diseases in India and policy needs. Thank you once again to everyone who has contributed to making this event a memorable and enriching experience. Your support and participation are deeply appreciated. Thank you. Thank you once again to all.